Malcolm Garvey, Huey.
It's Gangsta
Malcolm
Grills,
Garvey,
G's
Huey.
back, Grills,
Their
G's
life
back.
is like a movie.
Free
I die, I organize. Everything I do's revolutionize. I build what's good for the whole damn hood. Study G's like these, really think you should.
Checkmate 007 coming back at y'all. I know it's been a while. I think I took a whole hiatus on y'all. Well, look, man, I was finishing up, man, business intelligence certification, bachelor's degree in finance. I finished with the 3.8. You see the degree if you're on my Instagram at Mr.Checkmate 007. And I finished up the Series 63, secondary investment license. I gotta go for the third one next to be the investment broker. But enough of that. I came here to break down life insurance. I know it's a big issue, and I hear a lot of questions about it. I actually had a woman speak to me yesterday on Facebook that inspired the need for this video. And it's been sitting around, but I just couldn't find a way to really phrase it in a short amount of time I wanted to. So I'm going to go a little quick, and I'm going to cover the very high-level differences, what they're used for, and some of the terminology you need to be concerned for. We're going to start with the most affordable, which is the term life. It sounds just like what it is. You pay for coverage for over a term. It usually from somewhere between 5 and 35 years. And they're often renewable, and they're often transferable into some of the more permanent insurance. But the term is for a term amount of time. Simple enough. It's the cheapest. And I do want to mention this before I even go further. Life insurance is the only insurance that gets more expensive as you get older. You might want to look into it in your 20s when you're trying to establish a family. Okay. Now, there's also final expenses, but that's a more off-centered form of insurance. That's for people who want very little coverage for very little money for funeral reasons, just to cover the funeral. Now let's move on into some of the more insurances you hear more often. Now we're talking about permanent insurance now, and there's about 4 categories I'm going to touch on. You have a whole life. You have universal life. You have index universal life, and you have variable universal life. So still 3 variations, same insurance. They all considered permanent. They generally go between 85 to 121 now. They got a new standard. Now, there are one-time pay versions of this, which works similar to term insurance, which goes up to 65. But I'm not going to speak any more about those. Now, with these permanent policies, they have cash value accumulations if you overpay premiums, which can be borrowed upon as a loan or withdrawal, depending on the style of insurance. But there are surrender charges if you choose to cancel the policy. I see this being one of the biggest foregoers under COVID. A lot of people wanted to cancel policies and get the cash value, and it was not available because it's considered a surrender, because it is a long-term product. If you're not ready for this long-term product, go with a term and get a fund. It's easier to deal with. When I say fund, I mean mutual fund, index fund, any fund. And if you do not know what a fund is, check out my previous videos. Now with whole life, the premiums are generally leveled. Simple enough. With universal life, they get to be more flexible. Your cash value gives you room to play around. And now with IULs, which are index universal lives, they follow the index with the investments and the cash value. The index like the S&P 500. Now, with VULs, they have a lot more investment options depending on which company you've gone with. So they're used for more high yield, high risk investments as far as your life insurance is concerned. Now, understand, with that being said, most companies guarantee, but if it does bad, you may have to put more premiums into it. Now, let me cover some of the other terminology around life insurance. You will hear a lot, long-term care, where you can borrow from a policy if you're in trouble. This is a very particular one that's getting very popular as people understanding they're going to live longer than previous generations with the current healthcare situation. Now we're going to talk about riders. This is where you get to add additional coverage if need be. You have, I'm only going to cover a couple because only a couple truly matter. You have your other insured rider, which generally covers the kids or the wife. You get to put temporary insurance on them, like a term life stacked on top of a permanent insurance for other individuals. And they usually give you a limit up to about 5 or 6. And you have primary insured rider, which you can add a term additional on top of your current death benefit. There's a couple different terms for the payout, but death benefit is the main one. Where you can have a temporary term. If you die at a certain amount of time, you will get the death benefit plus an additional term, additional value. Now, there is a lot of different versions of a death benefit, which is the payout upon death. And it's usually non-taxable. Now, there are some versions where it go down as you get older or go up as you get older. Increasing, decreasing. You will hear them a lot. Especially decreasing. They do that a lot for home insurance. That's generally where you'll find them selling it. The increasing is generally for people who think they would need more later on in life. And the reason why life insurance is even established because it's the easiest way to create an estate to take care of your affairs upon demise, upon passing. If your house is worth $300,000, you better get life insurance great enough to cover it. So your family is not left without. So they are able to bury. A lot of us are focused on burying because we haven't accumulated assets. Life insurance is for protection of life. This notion with death being the first thing you learn as a life insurance agent is 10 out of 10 people will die. Plain and simple. No one's getting out of it. No one's getting out of this game alive. It's very easy. Now, with that being said, you have to learn how to protect assets in future generations, and that's what it's used for. The rule of thumb is 10 times the breadwinner's income. So if you make $50,000, you want to be covered for $500,000. That's usually the rule of thumb. You can work on that separate time. Give you some of the overall aspects of life insurance. If you're younger, start with the term, invest in a fund. You at least have funds growing in an investment account that you can use for future endeavors as you get older, while you're still covered. But if you go with the term, I would suggest you get non-refundable premiums. So if you outlive the term, you get the premiums back, but make sure it's also convertible. So if you want a permanent life insurance, you can convert it to a permanent policy. I did go kind of fast. I did cover all the bases. Understand, when trying to borrow from a life insurance policy, it will not be immediate. It will take some time to get the funds. So if you're in an emergency crisis, act sooner than later. With that being said, I covered just about all the forms of insurance as far as life insurance is concerned on a high level, at a high level view. If you have any more questions than this, feel free to message me. I'm more than happy to speak with you about them. If you have any comments, leave them. You can also check me out on YouTube under Mr.Checkmate 007, Instagram Mr.Checkmate 007. You can also find me under Facebook under Mr.Checkmate 007. I keep it consistent. Now, when we move a piece to the wind, as the king, that's a checkmate.
Their life was like a movie. Study Malcolm Garvey Huey. Malcolm Garvey Huey. Malcolm Garvey Huey. Their life was like a movie. I die, I organize. Everything I do's revolutionize. I build what's good for the whole damn hood. Study G.